In this video, I am going to discuss about job costing and batch costing. Let's discuss about the job costing first. Job costing is a technique used in management accounting to determine the cost of a specific job or project. It involves analyzing all the costs associated with a particular project, such as labor, materials, and overhead, and then allocating those costs to the project to determine the total cost. In job costing, each job or project is treated as a separate cost center and its costs are tracked and recorded separately. This allows managers to determine the profitability of each job and make informed decisions about pricing and resource allocation. Here is an example for job costing. A construction company that builds custom homes would use job costing to determine the cost of building each home. The costs associated with building each home, such as labor, materials, and overhead, would be tracked separately and allocated to each job or project. As now you can understand, we cannot use the standard costing to cost the each home for the construction company because each home contains their own specific requirements from the clients. So the company has to use the job costing. So it will be a more accurate calculation of costs. Here are the criteria to accept a special order or a job or a project. The first one is profitability. The company should determine if the job is profitable, considering the cost of materials, labor, and overhead, as well as expected revenue. The company should consider the impact of the job on the overall profitability of the business. Then the capacity. The company should evaluate if it has the capacity to take on the job without negatively impacting its ability to deliver other products or services. The company should consider if it has the necessary resources such as labor and equipment to complete the job within the required time frame. Risks. The company should identify the risks associated with the job, such as technical complexity, safety, and environmental risks. The company should consider if it has the expertise and experience to manage these risks effectively. Reputation. The company should consider the impact of the job on its reputation. The company should evaluate if the job aligns with its values and if could potentially damage its reputation. Strategic fit. The company should consider if the job aligns with its overall strategy. The company should evaluate if the job could help it achieve its goals, such as expanding into new markets or developing new capabilities. Legal and contractual obligations. The company should review any legal and contractual obligations associated with the job, such as intellectual property rights and confidentiality agreements. Now let's do this example. A construction company has been offered a job to build a custom house for a client. The client has agreed to pay $500,000 for the construction of the house. The construction company has estimated the following costs. Direct materials $150,000, direct labor $200,000, overhead costs $50,000. Should the construction company accept or reject the job? So what we have to do is we have to calculate the total cost for this specific job. So the total cost is equal to direct materials plus direct labor plus overheads. So this is equal to 150,000 plus 200,000 plus 50,000. This is equal to 400,000. So this is the total cost and they have given us the amount that the client is agreed to pay, which is 500,000. This is the revenue or this is the price they are willing to pay. So what will be the profit? Profit is equal to 500,000 minus 400,000. 500,000 is the price of the project, 400,000 is the cost of the project. So the profit is equal to 100,000. which means this project is profitable to the company. They can consider to accept this project because this is profitable. It is important to note that not only the profitability but also the other factors should consider when it comes to job costing, which are capacity, risks, reputation, strategic fit, legal and contractual obligations. Now let's discuss about the batch costing. Batch costing is a costing method used in management accounting to determine the cost of producing a group of similar products called a batch. In batch costing, costs are accumulated for each batch of products rather than for each individual product. This method is used when a company produces a batch of products that are identical or similar in nature. Batch costing is commonly used in industries such as pharmaceutical, food processing, and consumer goods manufacturing, where products are produced in batches with relatively small quantities. It allows companies to track the costs associated with each batch of products, which can help them make better pricing and production decisions. Here are the steps to follow under batch costing. Identifying the batch. The first step is to identify the batch of products that will be produced. The batch size may vary based on the production needs of the company. Determining the batch cost. Once the batch is identified, the costs of direct materials, direct labor, and overheads are assigned to the batch. This can be done by dividing the total cost of these inputs by the number of units in the batch. Allocating costs. The cost of each batch is then allocated to individual units produced in that batch. This can be done by dividing the total cost of the batch by the number of units produced in that batch. Analyzing the results. Finally, the results are analyzed to determine the cost per unit of each batch, which can be used for pricing decisions and to evaluate the profitability of each batch. Now let's do this example. A company produces batches of 500 units of a product. The cost of direct materials for each batch is $2,000. Direct labor cost is $1,500 and overhead costs are $500. What is the total cost and cost per unit for each batch using batch costing? There are 500 units in a batch. Now let's calculate the total cost per batch, which is equal to direct material per batch, direct labor per batch plus overheads per batch. So $2,000 plus $1,500 plus $500, which is equal to $4,000. So this is the total cost per batch. Now let's calculate the cost per unit. So the cost per unit is equal to total cost divided by the number of units in a batch. So the total cost is $4,000. There are 500 units in a batch, which is equal to $8 per unit. Thank you for watching. See you in the next video.